Let's check out the energy markets. Joining us now, Amrita Sen, founder and director of Energy Aspects. And, I look at the prices. Set the scene for us here, Amrita. It seems like a pretty well-supplied market. Crude and Brent pretty close to their bottom of their range, but it's been a gentle range. So what are we moving on? What's the incremental swing factor here?
Great question. I think the biggest driver right now in the market is demand, more so than supply. We've been through a period of very weak Chinese demand figures. We do think China should be bottoming out over here. The worst should be behind us, but any incremental growth is going to be gradual. The U.S. economy, there's a lot of fears about a significant slowdown. We actually don't think the data warrants that kind of fear. If anything, demand, or at least for oil, does look decent. I think China has been a lot worse. I think those have been the biggest drivers of both sentiment and prices. The market at the prompt is actually quite tight. You can see that, backwardation, the front contract is trading quite a bit higher than the second contract. We are drawing inventories everywhere, but it is these demand concerns that's keeping a lid on prices. Otherwise, I would expect prices to be higher.
And presumably, based on what you say, we don't really have too much of any geopolitical premium in there at the moment?
Not a huge amount, and also because pretty much ever since the Russian invasion of Ukraine, we haven't seen supply outages. Anytime you've had geopolitical risk premiums, we found a way to keep the oil in the market, be it by design, like the U.S. government's designed its policy so that you effectively have oil and gas, mostly, but oil. It's still hitting the market, and I think that's why people have faded all geopolitical risk premiums off late.
And then when it comes to OPEC, I know there's expectations of a bit more supply, although I also am seeing some things about how Saudi, wants to protect its market share. So is that just going to be something that holds the market in check?
As of now, our balances do reflect OPEC Plus bringing back balances, exactly like they have said they will, a little bit in Q4, then gradually through 2025. Ultimately, they have maintained that they will only do so depending on market conditions. We do expect inventories in particularly key centers like the U.S., for instance, to end August at nearly record low levels, adjusted for kind of demand cover. So they do have space to bring some barrels back, and I think they are going to at least do the Q4 tranche. Should the economy weaken significantly next year, that's a different story. But as of right now, I would say that the unwind is on track.